Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
So hi, everybody, and my mom, who's hopefully watching. It's me, Heather, who gets to work in investor relations with all our investors, and Jamison, our CEO and co-founder.
Thank you for having me, and I hope your mom is listening too.
She better be. And we are going to talk about some things that our investors have been asking about. And because I also want to know. This is also for my education.
Yeah, right now we don't have a live project, so maybe the biggest question we've been getting that I've been seeing is when is the next project going to come, so we can talk a little bit about that.
And I think I asked that the most.
Yes, you do.
Yes.
Because you're hearing it as well. And a lot of things are going on with the financial world. Some of that has an impact on real estate. Some of it has less of an impact on real estate. So we're going to dive into that today.
A big one, I think, is I hear the word inflation, and all I know is that my Diet Coke costs more. And other than that, I don't want to hear about it. I want to put the blankets back over my head, but I know that's not reasonable. I'm a grown-up, and our investors want to know how that relates to us, what that means for us.
Yeah, and inflation is something that basically takes wealth from everyone, but the folks who get hit the most are at the lower end of the economic status pool, because what ends up happening is things are costing more. Basic goods are costing more, gas is costing more, rent and housing are costing more. And although wages have moved up, typically it's not enough to cover the increased cost, and that's what's happening right now. Wages have moved up slightly. I think the last number I saw in Arizona, they're up 5 or 6%, but costs are about double that. And so really the only way to counter inflation is to have money in assets. Don't have your money sitting in cash because it will decline in value. And we had the professor from ASU in about a year ago talking about inflation, and I thought his definition of it was really helpful. And that is, inflation basically occurs when there is too few dollars chasing. Let me restate that. Inflation basically occurs when there's too many dollars chasing too few goods. So we saw that after COVID and the lockdowns started reopening, people were wanting to buy stuff, and they had stored a bunch of cash.
Yes. Oh, yeah.
They weren't spending it on discretionary things, travel and other things. And then all of a sudden they had the economy had all this cash available, and they wanted to start buying stuff.
We want to do our part. I'm going to
Yes.
help the economy, and I can buy this stuff.
Yeah, and it
exciting.
was kind of this pent-up demand for houses, for cars, for vacations, for travel, for everything. So you have all of this cash chasing a limited supply of goods, and then we had supply constraints because of the lockdowns. The supply chain was broken across many sectors, and so too few goods available with too many dollars chasing them, and so the price goes up, and that's economics 101. So how this impacts us is our rents for our projects is moving up because the market rent is moving up. Just like gas is higher than it was a year ago, rent is higher than it was a year ago. From an investor standpoint, that's a good thing, because we just take the rents up to the market level of wherever those properties are. And we would be doing a disservice to our investors if we kept the rents lower than the market. And our commitment to our investors is we're going to take the rents to where the market level is.
So this is a good time to be an investor, because I think that helps balance it out between, if I'm an investor and also a consumer, then I've kind of balanced out what's happening.
Yeah, that's right. And if you have invested in assets And in the case of our projects, we pay a 12% annual return. So if inflation is up 8%, which is what it was, your money has grown 12% with us. The 8% inflation kind of offsets 8% of that, but you've still had a 4% increase, which is better than if you had your money in cash and you'd be negative 8%.
So I can be less sad when I fill up my tank.
That's right. So inflation at this level is not a good thing for anyone, but it's better to have assets if you own companies, if you own real estate, specifically apartment buildings. Those rents go up, and so our rents are moving up. The other thing that's impacting us with inflation is the cost of goods continue to move up, and we remodel a lot of our projects. So we try to lock in pricing as early as we can. We try to get materials as soon as we can because pricing tends to move up. We're seeing some stability in some areas. Appliances, for example, now we're able to get the appliances when we need them. There are some other areas that like a specific vanity that we wanted for a property, for example, we couldn't find it. Right. So there are specific things that the supply chain is still backed up on, and that with inflation, those costs continue to move up. So that's some of the ways that inflation impacts us and our investors.
And now I remember when we had, I think it's Professor Dennis Hoffman on from ASU, that I really liked what he had to say, that podcast, because I did feel a lot calmer after. I thought he gave a good broad kind of overview of not to be panicked, that this is cyclical, this is normal to have these waves of inflation, it's going to be okay. The world is not ending, right? I need you to tell me that. I want someone to tell me.
Well, and things have changed since we had him on, where we started at that point to see a little higher inflation. We're now to the point where we know that inflation has happened. Initially, the Fed said that they thought it was just temporary while the supply chain was getting corrected and fixed because of COVID. We are now past that, and the Fed is saying inflation is real. The only way the way that the Fed counteracts inflation is by trying to now slow the economy down. So if we think of that definition before about too many dollars chasing too few goods, now the Fed is trying to slow that down and put less dollars in the market. So they've increased the cost of borrowing. So if you're going to buy a house now, instead of it being 2.5% that it was 6 months ago, now it's 5%. And that fewer people will borrow at 5% than they did at 2.5%. Fewer people can qualify. And so the Fed really relies on taking the interest rates up to slow down inflation.
Yeah. Just get people to take a break. Like take a beat, take a breath.
Yeah, and it slows that down. And that's what we're already seeing. We're already seeing it in the housing market. We're really early. We're the last 3 or 4 weeks, we're starting to see some of these numbers come in, where the price increases that we've seen for housing across the country just continue to climb. Now, I think we will start seeing that slow down, which is a good thing. We need that. We weren't in a sustainable area before. And I think over the next 6 months, we'll see inflation has hit its peak, and with higher interest rates, it will now come back to more of a normal level, which might be 2 to 4%.
Yeah, so just like a pendulum. Just gotta wait for it to swing back to middle.
Yeah,
I can do that.
And the pendulum happened because we put $6 trillion into the economy with PPP, with paychecks going out to folks, with stimulus that the government did. It's not rocket science. We put $6 trillion into the economy to counteract COVID because we were scared that the economy would halt.
Yes.
So they wanted to incentivize it. They wanted to put money out there. Now we're kind of stepping back with that pendulum and tightening things up again.
Yeah. Okay. I feel better about that. So we know why investing right now is a good idea, especially Arizona real estate. But I think there's people like you who are naturally more financially inclined, and it's interesting to you. And there are people more like me who do want to kind of just avoid it. It's a little overwhelming. It might be boring. How do you how do you develop that? Can you develop like a love or an interest in investing or even taking care of your finances if it's not something you're super interested in? It's not as fun as watching Law and Order on my couch.
Yeah, I think that for me, I started studying the front page of the Wall Street Journal when I was in college because that was what you were supposed to do when you studied finance. And so I started getting familiar with it. And I think that's where you need to begin as an individual who's going to try to grow your savings and your net worth to retire. You do need to put your toe in there enough to where you have a sense of what's going on. You can defer it all to a financial advisor if you want, and a lot of people do that, and there's nothing wrong with that. Most people who are the most successful and who actually feel better about what their money's doing dive into it and try to at the beginning just kind of learn about it. And that what I mentioned before is what you can start doing is just looking at the front page of the Wall Street Journal every day, or the financial news on a website that you can find online, and just trying to get an understanding of what's happening financially. And you don't have to be an expert in the space, but you do kind of need to know some of the big things that are happening. What's happening with interest rates? What's happening with the Fed? Are major companies, when they report their earnings every quarter, are they doing well? Are they not doing so well? We learned last week that Walmart, Target, Amazon all didn't do well in the last quarter. They did under expectations. And so you can kind of understand and see when that happens. You can make assumptions as to why that happens. In that case, people's spending started slowing down, and they didn't meet the expectations that people thought they would have as far as revenue.
Well, I don't know how Target isn't doing well because I certainly help.
Yeah.
I do my part, Target. So I think reading something that lets you know what's going on in the financial world, that's an easy commitment, right? If I can give 5 minutes every morning to doing that. I think also looking for someone who knows a little more than you do and asking questions. I know you're someone I will bother forever about all of this. Because I have to trick myself into this kind of thing. I have to.
Well, and I'm not a financial advisor, but as you build your savings and your dollars that you can invest, it's a good idea to talk to a financial advisor. There's someone who has the licenses and the expertise around how to set up your retirement in the right way. And I don't have a financial advisor myself because I'm very comfortable doing that for myself, but I don't advise other people. With our own projects, and what makes real estate so simple is it's important to know what you're investing in and to understand how it works. And we understand that when it comes to apartment buildings, the revenue comes from the rent. The costs come from whatever maintenance that's happening, and whatever is left over is the profits, and that's what you'll get when you invest in an apartment building. So understanding how any investment works is where you want to start. And before you invest in anything, you should have an understanding of how it works. If you're going to invest in Target stock, understand how Target works. And that's pretty easy because all of us go to Target. And I think that's a great place to start when you start having some savings and you want to invest.
And so is there a checklist when you're to say, okay, now I'm ready to invest? Now is there something you look at and say, okay, now it's time to put some money?
It's really like making any decision in life. Before you make it, you need to spend some time and kind of stew in it. And then at the end, as you go through the process, once you get comfortable with it, if you think about making a purchase of a car or a TV, you kind of go through a process. It's the same with investing. You go through some sort of educational process, you do some due diligence, some research, and then once you feel like you know enough about it, you make the investment. And that's what we see with our investors. A lot of them will follow us for a few months before they place the investment. And I think that's really smart.
Yeah, they do the work to find out who we are, what our process is, and that's what I love. And we have a lot of resources available we have our podcasts and our master class and our video series. There's I think his name is Dr. Adam Gower, who wrote a book about crowdfunding, and one of my favorite things from it is he talks about that education is the number one kind of indicator or that will help people invest. It'll be that it's not sales, it's education and feeling confident, and I like that. And so
Yeah,
I think-
and we don't have a sales team at
No.
Neighborhood Ventures. We don't sell at all. We just put out information. We put out educational content.
Mhm.
When someone's ready to invest, you're there to help them
Yep.
answer their questions. Many of them do it on their own through our website. So we don't have a sales team at all. And that's when it comes to investing, we let people do it when they're comfortable.
And I've really found that if they invest once, they'll keep investing. So when they're ready,
Yeah.
and then I think, oh, there we go.
Yeah,
And now we're friends
because
forever.
you've
Yeah.
done your due diligence. Now you get
Yeah.
comfortable with it. And then you, if things go well, you'll keep investing in that because it's kind of like you keep going to that well. If
Yeah.
you're getting water out of it and it's taking care of you, you'll keep going back to it.